Why does it feel like things change after you hit that $20,000 mark in your trading account? All right, so peace and welcome. I am TL Turner. On this channel, I do believe that trading successfully is 95% mental, 5% technical. So, meaning 5% your technical edge or way of seeing the market. And so, on this channel, I do dedicate a lot of time to giving you mental strategies and discussing mindset in a way that we can use to enhance our performance overall with trading. So, if that's something that interests you, I do invite you to go ahead and hit subscribe. We're Our next goal is 5,000 subscribers. And if you would like the video, that would also be a major help to the channel so that we can allow this content to reach more traders. So I'm going to share a personal story with you all about what happened to me when I did cross over the $20,000 mark in a live trading account. And because when I started trading currencies full time, I wasn't aware of funded accounts. And so I do have opinions on funded accounts because to me, a funded account, it's nothing wrong with it, but we have to put it in the perspective that it's a career, right? So you are an employee of that firm, and the whole thing is, let's just say they you're funded with $100,000 account. Technically, they'll tell you that those aren't real market conditions. But I always caution people because it's like, if you have demonstrated to this firm that you can consistently do 10% a month, oh, they'll pay you because they're probably selling your trading ideas. I mean, you got to think about it. If you have someone on your team that is consistently doing at least 10%, oh my goodness. I have a buddy with a company that's worth over a couple $100 million. Yeah. And so think about it that way. But I digress. Trading on demo, trading funded accounts. If you're, and I'll say this about funded accounts, if you're going to trade a funded account, definitely have a goal to divert the profits to your own live account, right? Don't get caught up in thinking, okay, well, I'm with this firm and I have a $150,000 trading account, and this month I made my payout of 15,000, and then next month, and don't go and blow that money. Like, my whole strategy would be to take the profits and peel it off so that you can start trading your own live account with the profits that you made from the trading firm. And I remember when that wave came through where a lot of the funding challenges were starting to be limited for US traders. So we'll that's we'll come back to that. When I first funded my account with over $20,000, one of the main things that changed was I was with an unregulated broker at the time. I didn't know, but they changed my leverage. Okay. And so, to someone that is brand new to trading, they may not really understand the difference that leverage really makes. Because if you have, let's just say you had a $2,000 account and you had 1 to 1,000 leverage, all right, that you could really run up a bag, okay. But when I was over the 20,000 mark, the broker that I was with lowered my leverage from 1,000, right, 1 to 1,000 to 1 to 100. Now I'm with US based brokers, and of course their leverage is 1 to 50. Yeah, and so just that psychological shift, I realized that I was not prepared for risk management in a way that allowed me to continue to grow my account in an exponential way. I was taught a very basic level of how to position size, where it's taking your account balance and then dividing it by. And this is also something that I saw work, but it didn't occur to me until I got over the $20,000 mark that, whoa, okay, so just because I have $20,000 in here, I'm not able to do 10 lots on this, right? Because if I have other positions going, or depending on the pair, depending on the required equity that is needed to put that trade on, That's why sometimes when I see profit shots and it's like a $5,000 account and they have 10 lots on US 30 and their margin level percentage is in the thousands, it's like something is awry, right? Because any trader that has ever put that amount in their account or grown their account to over that amount, depending on the broker, some brokers keep you at the same, right? Some brokers do keep you at the same. They may cap you out at 500 or 1 to 500. But that was the main thing that I noticed is that the leverage changed. And so I had to pivot in my understanding of risk management. Okay, so I started using a tool, it's by FXCM, where, and this is before I was really using TradingView. And I feel like over the years, TradingView is their product line has expanded so much to where you can use the position tool and it'll calculate all of that. But I was using FXCM. They have a profit calculator, and I would go in and I would put in my entry, okay, and then I would go in and I would put in my stop, and then I would put in the position size to determine, okay, well, if it does go to this level on this pair or commodity, then what is that going to look like as far as risk? And so that was one major shift. But prior to that, just to the person that has gotten into a point where financially, if you've saved up 20 racks, you're a different person mentally. Okay. Because the average person in America, we're speaking specifically, has not experienced saving and holding over. I mean, studies probably show it at 500. I'll give people the Benny of the D for the average. I'm talking about going across the board, probably about 1,000, maybe maybe $5,000 in an account that is not for other things or quote unquote an emergency. I don't like saying emergency funds. I always say opportunity funds because I believe in the power of words. And I believe if you have an emergency fund, then you will continue to have emergencies. Yes, my my take on that. To the person that has accumulated $20,000 in cash, you are a totally different type of person. You've been able to sacrifice, you've been able to tell yourself it's okay, that delayed gratification. You've been able to see opportunities from a position of being able to act on opportunities, and the value of the money being used towards an investment has a totally different weight versus someone that may deposit $2,000. And sometimes when I'm in these online forums or chat rooms and I see people saying, "Oh, that's a large account," and the account is at like 5,000, that just tells you a little bit about their mindset, right? It's like interesting because if that's a large account, then what are large profits by your definition? And so that's why I don't ever say 100,000 is a large account or 200,000 is a large account. Whatever the account is, that's what the account is, and it can get larger. That's my mantra. Is let it get as large as it needs to be. The other thing that I wanted to point out is when I did hit that mark, the way that I approach trading as far as qualifying opportunities totally shifted. I was not on my charts every single day trying to pop in a trade and see what was what. I became extremely selective. Okay. If this is a business deal and I'm putting out this amount of money to invest in this deal, then it has to be tight. Okay. It got to be right because the thing about it is too, if you didn't know, if you're trading with an unregulated broker, if you're trading with a regulated broker, they have tools where they can see what's in the accounts. I guess this is foreign to some people, but I remember studying the market maker and the market maker's playbook. They have the tools to see exactly how much people have in their accounts. And so with that being said, if you have a certain amount in your account, not to make you afraid like you're a target, but if you are over leveraged and they pull, if you're in that A B book situation and they pull a move and they run stops, boom, you're taken out of that trade, right? So overexposing yourself was a foundational principle that I was taught that I'm grateful for. But the whole thing is being more selective when it came to putting my money on the line to open a trade. It wasn't, listen, they had to be juicy. Okay. At least 1 to 5, excuse me, 1 to 3 risk reward. Not one. I don't, hey, sometimes it would be 1 to 5, but it's like, yo, I'm not doing a 1 to 1. Why would I do a 1 to 1? My opinion. Because if, and I get it, some people that scalp tend to do more 1 to 1s, but because I'm looking at a swing trading opportunity, baby, it needs to be at least 1 to 3, right? 1 to 5, chef's kiss, because I definitely would put a bet on that, right? And so we know that according to Mark Douglas, every moment in the market is unique. There's a random distribution of wins and losses. But for me, when I got over that mark, I said, listen, if I'm putting this money out, it's not that I was like I have to win, but I was trading to win. I was no longer trading to just trade. And so that those are the two things I just wanted to share from my experience as to why things change. And I mean, what do you think? Have you noticed certain things with the brokers that you're with? I mean, do they have different leverage amounts? And then circling back to the funded account, by all means, I think that that's a good career. But at the same time, you have to be aware that if you're doing 10% a month consistently, they could quite easily sell your trading ideas and make, yeah. So, and here's the thing, working in sales helps you to really understand this whole commission environment. Yes, because in typical sales, put this number in your mind. In typical sales environments, you're earning sometimes anywhere from 5, and if it's a, depending on the industry, I've seen it, you can go up to 50%, but that was like a one-time sale, right? So maybe let's just go up to 5%. They're paying you out your commission of 5% of the deal. Okay. And so, I mean, yeah, if you're making 10 grand a month, that's great. Or you're making 15 grand a month, that's great. But you should be aware that if they can afford to pay you that, that your value is a whole lot more than what they're paying you. And so that's just encouragement to have a strategy while you're doing these funded challenges. Strategize so that you're not in a loop of the corporate world, where you're you're on a pay regimen that is still being controlled by someone else, right? Set yourself up for success. And let's just say you've grown and you have $1 million funded account, and now you're doing 10% a month. Hey, by all means, put that into a trading account of your own and see how much or how fast you can get to having your own account with that amount and still trading the fund. And I'm sure probably a conflict of interest, and that should be caution. That should be a caution. But I digress. I've never worked for a a trading firm that does proprietary trade, and that's the I was about to start cooking. Okay, because what's the definition? Is in the word prop. Let me Google prop just in case you didn't know what the word means. And this is not according to me. Okay. It says, so this says something in position underneath for support. Okay. Not so bad. There's another definition that we want to look at. But think of a prop like in movies, a portable object other than furniture, costumes used on the set of a play, right? And so it's a prop firm. That's a whole nother video. I don't want to get into that right now. Anyway, appreciate you for spending some time with me. If you found value in this video, share your thoughts too. I mean, if you're still here to the end, drop some black hearts in the comment section, and I'll catch you in the next video. All right, take care.